Hi, welcome to this edition of Square Feet to Acres, where we run the numbers. It's your host, Brooklyn Camden Yards, license number 253-516, hailing from the great state of North Carolina. It is my pleasure to introduce today Micah Greene with Dream Home Purchase. Micah is a commercial lender mortgage broker, and I am excited to have him on the platform today. Micah, welcome.
No, thank you. Thank you. Thank you, everybody. Thanks for having me.
Yeah, absolutely. So let's jump right in, right? Just want to get to the meat and potatoes of it all. So
Right.
talk to me, Micah. Let's start with your story. What inspired you to specialize in investment mortgage brokerage,
Okay.
and what sets this niche apart from traditional lending?
I think what inspired me, I wanted to kind of educate, empower, and impact more people, kind of more people. Not just, it's just not good enough to just purchase and own a home no more. Right. So
Hmm.
I wanted to be, have a program or a product to give to people to help them create generational wealth. And this particular programs and product that I have with commercial and investment properties help do that.
Okay. Okay. Well, thank you for sharing that. So, investors often talk about the deal penciling out. I
Mm.
know what that means, you know what that means, but for the audience, from your perspective, what core numbers or metrics truly determine a smart investment?
And that's a great question because pencil out is basically making, money, right? Making
Yeah.
something on your return or on your investment. So what that is so different from for everybody. So like success is different. That number is different for everybody. So typically you always want to have a profit. Now that profit, short or long term, will determine how do you want to go about your investment property. So again, the biggest key is definitely a profit, right? The next best thing, of course, is getting the max return on that investment.
Yeah, and I have to agree with you on that. It depends on what the end game is for the investor. Some folks go into the deal and they are okay with the 5% cap rate.
Yep,
But then you have other investors who want a quicker rate on their return. So a 7 to 9% cap rate looks more attractive. So again, I have to agree with you 100%. It depends on the goal of that particular investor.
absolutely, absolutely.
Yeah, so this market has been interesting to say the least. We've seen
Crazy.
rates, yes, yes, it has been a roller coaster ride. We've seen rates rise and lending tightening. So, how are seasoned investors adapting to their strategies, and what are lenders looking for now?
That's a really, really good question because investors are much different than your traditional buyers, right? So they're taking advantage of this market,
Okay.
right? Where people pull out, they jump in because they get it now because they know they're a little bit more savvy where they jump in now, knowing rates is going to go down at some point, right? So they buy up more properties now at typically discounted prices because the rates are higher. So the purchase price is typically a little bit lower. So they'll go in and purchase those properties now, waiting for rates to go down when everybody else, with your traditional buyers, jump in and then they'll sell.
So would you say, when you say that to me, I'm thinking investors buy now, and then once the rates, interest rates drop, then they'll go ahead and refinance, correct?
Correct. Or
Okay.
even sell. Or
Or
even
either
sell because we
sell.
got more people in the market, meaning that, somebody may not be able to afford a $400,000 home at a 7% interest rate, but at a 5%, now that creates a bigger pool for that $400,000 home.
Yeah, yeah. Well, thank you. Thank you for your insight on that. So walk us through what a finance-ready investor looks like in today's environment. And what do you wish more clients understood before approaching a lender or a broker?
Usually your investors know their credit score. That's going to be the key. They know probably a good 15 to 20 point range of what their score is. That's the first thing. So
Okay.
they're ready, and then they have their assets in order. So those are
Okay.
the two biggest things, your assets and your credit score. Everything else, you call me, I'll figure it out for you. But outside of that, you're good to go. So your assets and your credit score, because the programs that we have is not income based, so to
Mm-hmm.
speak. You definitely want to know what your credit score is, and you definitely want to make sure you have some assets.
Okay. Okay. And when you mention assets, can you drill down a little bit more on what that looks like on your end, what you're looking for?
Yeah, so typically I would say 20% down payment would be the first number, right? So whatever you're
Okay.
looking for, meaning for every 100,000, you're looking at $20,000 of assets. So depending on your purchase price, whatever you're looking to buy, you want to have 20%. That's the first key. Of course, closing costs, things of that nature comes after it, but 20% is the main number that we look for you to have.
And the minimum credit score
I
that
would
you're
say
able to
660. Yeah,
660?
yeah. 660 minimum credit score,
Okay.
20% down, everything else we take care of.
Okay, great. And I'm trying to ask the questions for the first time investor or the folks who own property already and now they're looking to expand their portfolio to build that generational wealth that you mentioned, but
Right.
obviously, may not have had the that big brother or uncle or dad or mom
Yeah.
to go ahead and coach them along the way on what's needed. So that's
Yep.
that's the purpose of my question.
Absolutely. Absolutely.
Okay, so in commercial or multifamily lending, how do you balance risk assessment with opportunity? And what are the red flags, I should ask, versus solvable challenges that a new first investor may have?
So, and I'm glad you asked that because a lot of investors you typically ask me those questions too. So that's a great question. And like we talked about before, it's different for everybody. The main thing I think right now, that first time investor, I will typically say a fix and flip may not be the first thing you should do.
Okay.
And the reason being now you're involving another party, which is a contractor, to help come in and get the work done and do so. You may not be real, have a lot of experience with contractors, how they do their business, upfront fees, things like that, draws, things like that. So you may not be experienced in that avenue. So I always say, well, let's get you one first or get a contractor first that you trust before you go down that road. That's usually the biggest thing or red flag I will always caution investors with, especially first-time investors.
Okay, okay. Well, that makes very fiscal sense because it is a completely different lane when you have GCs and having to pay subs, and it's just a lot of moving parts, right? So if you're not
Absolutely.
familiar with the process, then yeah, I agree with you.
Yeah.
So
Yeah.
collaboration in this business is
Yeah.
huge, right? So how can real estate brokers and mortgage brokers better work together to create smoother transactions? So I'm a commercial broker. I know
Yes.
you
Yes.
deal with multifamily properties and commercial lending. So how can someone like you and I collaborate to make this a smoother transition for our client because we want them to win?
I think just like what we're doing now, communicating. I mean, not just to each other, communicating to the buyer, being upfront, right? And educating that buyer on the purchase or that process too, right? And then it's going to be times where um, I may have something for you where it may not truly benefit me as much, right? So I think that's really when you start collaborating where everything is not, the bottom line may not be a huge benefit to you. I think that's the key because you may have avenues that I never heard of that, it may take a client down a path for them to be beneficial, but for you and I, it may not be as beneficial. So I think those kind of keys where you're just looking out not just for yourself, but for the benefit of the buyer. I think that's the biggest key with collaborating in this business.
I would agree. And I would just like to add this caveat, especially on my end. If I send a client your way and you're communicating, with the ex parte of their finances, because I don't need to see that, they just need to be approved. But
Yep.
whatever dialogue, I would just appreciate the professional courtesy. And I'm just putting this out there, the
Yeah.
professional courtesy for the lender that I'm working with to just keep me in the loop of what's going on. So when I do speak with my client, I'm 10 steps ahead of the game. And,
Absolutely.
so it's very crucial, as you mentioned, the communication piece.
Yeah. Yeah.
So, what are some of the creative financing strategies you've seen lately that have allowed investors to move forward when traditional lending wasn't an option?
Now, this is my question. I love this question, right? So this is where we get into like the nuts and bolts of everything. It's called the DSCR program, right? So that program allows an investor who they don't have to have any traditional income. So no tax returns, no W-2s, no anything. Again, like we just talked about, bank statements with your 20% down, the credit score, we move forward. No ifs, ands, or buts. So no red tape. You cross all of you cancel all the red tape out. And those specific things we don't need. So this has allowed not just a few investors, all investors to jump into the market. And the reason why I love this is no income.
Mhm.
So you take income out of it, so you could literally don't, if you make $10 an hour or you make $10,000 an hour, this program is for you. That's
And
why I
that's
love it.
and that's the debt service coverage ratio, the DSCR.
Correct.
Okay.
Debt service
Okay.
coverage ratio. And what we use is the potential rental income as your income for the specific property that you're purchasing as an investment property. It just makes too much sense.
Yeah, that sounds very attractive when you're able to use the rental and the anticipated rental income from the asset to qualify. We have
Yes.
to talk a little bit more.
Yes, I love that. I love the program. The program is that's what all of the investors are using. Every last one. There's no need to use traditional financing because of the fact that and another thing too, Brooklyn, is this goes on your business credit. So this doesn't show up on your personal credit. So you could buy two, three, four like personal properties, but this goes into your business entity. That's the
Oh,
great thing about this particular program also, where investors love it.
hmm.
Yeah,
My
so
mind
that
is
it does
clicking.
not so it does not affect your personal credit.
Wow. Okay, we might have to get back online at another time. I might have to
Yeah.
snatch you up so we can dig a little deeper into that DSCR, right?
Yes, ma'am. Yes,
And
ma'am.
specifically drill into that. Okay, so you've seen a lot of deals from the inside. What's one cautionary tale or lesson learned that every investor should take to heart?
Let's see. I think I think the biggest thing with investment, like we talked about, is the general contractor piece. But I think the other piece, they got to be realistic about their goals, Brooklyn. They got to be realistic about what we talked about earlier, short term versus long term. Are you going to carry that home for years and go about that way? Or like we talked about, are you going to do a fix and flip? So I think I usually have a consultation with buyers and I kind of ask those questions. That way I can lead them down the right path, right? So I think that's the biggest key. They don't know what they want to do, meaning that if they're going to be a landlord or they just want to just fix and flip properties. So that's the biggest thing where I tell them, hey, let's make sure we understand both benefits and both cons before we move forward. That way you can move forward with the right property. And again, that's where someone like yourself as an agent comes in, and that way you can start looking at properties for them.
Okay, okay. Well, looking ahead, where do you see opportunity in the next 12 to 24 months? Any specific asset classes or market investors should be watching?
I think right now the multifamily homes is the biggest key. I mean, I don't want to give out um, ideas, but it's just too many ways you could draw income
Hmm.
with multifamily homes, and not to say single family you can't do it that way either. But I think the multifamily platforms is definitely the key right now, which because the one thing is the supply and demand. It's just not a lot of them, right? So I think that's from a supply and demand. Um, and then again, people are building businesses around this program, purchasing investment property. So they're building their own business in multiple ways. So I definitely think the multifamily home is to me is the key.
Hmm. Hmm. And I was just thinking, I would have to agree. It's more, I would say multifamily is more of a solid foundation because you have the asset classes of office and retail and
Yep,
industrial. And yes, industrial and flex spaces are running it right now as far as
yep,
the return, but everyone needs housing, right?
everybody.
So it's automatically going to reset back to multifamily or housing
Yep,
where you can always glean income from it,
yep,
right? So
yep.
I would agree. Now, I know your time is valuable, Micah. So finally, my last question is for those listening who are ready to take that next step, what's one actionable piece of advice you would give them to start preparing financially for their first or next investment?
Okay. And again, you could purchase, people don't realize you could purchase investment properties without having a primary home. I think that's one thing that a lot of people don't realize. It doesn't matter if you have a primary residence or not. But I would always start by saying, hey, figure out your goals in regards of, are you going to do multiple homes? Are you looking at that one? I always will always advise someone that even if they don't have a primary home, look for your primary first.
Okay.
Get your primary first, and don't get me wrong, and then you build your legacy off your primary. Where you like we talked about, I think before, where you do some cash out options, and then you start building your portfolio from those cash out options off of your primary. So you get your primary, you use your primary home as the foundation and the legacy for everything else that you want to accomplish in life.
Okay, well, thank you so much for your expertise. I want to leave space for you to give the people who are watching your contact information, your social media handles.
Yeah, yeah. Well, definitely come. You can, follow me on Instagram or Facebook at dreamhomepurchase.com. My website is www.dreamhomepurchase.com. Feel free to hit me up on my website. Again, I'm on IG and Facebook at Dream Home Purchase, or Micah Greene. Feel free to look me up, add me, send me a friend request, whatever the case may be. Holler, scream, kick, it doesn't matter. Just holler at me, let me know you need me.
Yes, absolutely. I will be getting with you offline for sure. But Michael, one more thing that I want to add that I think this is a critical piece. Just wanting to clarify, although we are in the state of North Carolina, but your reach as far as working with clients, is nationwide, right?
Absolutely. All 50 states. Well, I will say about 40 states.
40
So,
states.
South Dakota, North Dakota, places like that, Wyoming, unfortunately, we don't deal with those places.
Okay.
Because of course, clearly, their geographical areas that it's just not much out there. But everywhere else, about 40 states, we're living in. So yes, if you need me, holler at me, and you, because you can do the referrals at any state that we work in. So yeah, it would be great.
Yeah, yeah. Well, just because we're in North Carolina doesn't mean that our reach doesn't go further,
Oh
right?
yeah. Oh yeah. We could touch everybody. Doesn't matter where you at.
That's right. Thank you so much for coming on and doing Square Feet to Acres with me. And I'm excited about the future and, just great information for the audience and the first time investors and even those who are, second time investors, right? So,
Absolutely. Yeah. Yeah.
yeah, we're here to help navigate in a way that's full of ethics and integrity
Yeah.
and just transparency, and we love what we do. So
Absolutely.
again, thank you again, Micah. It is your girl, Brooklyn Camden Yards. I am signing out. Peace.